Thanks so much for tuning in to BQ Conversations. I'm your host, Neeraj Shah. Very special guest, Mark Matthews of Bank Julius Baer Johnson, to give us his sense of how he looks at India, considering that we are atop Mount 20K. Mark, thanks so much for taking the time out. Really special having you.
No, it's not special at all, but I'm honored to be here. Thank you, Niraj.
Thank you. For us, it is, Mark. And also because it's at a time when Indian markets have gone past one more landmark, if you will. How do you see Asian markets in general and India within that? Because the last time that we spoke, you had mentioned that, yes, India is an attractive market, but there are others which are also looking very attractive, Japan, for instance. So how is Asia as a bunch looking currently to you?
I don't recall that conversation word for word, but I'm guessing what I meant by that was the size and depth of the Japanese market and the fact that it's a developed market with brand names that are recognized around the world was making it the first stop for foreign investors in Asia. And that, I think, remains the case. If you look at the top 100 listed companies in Asia Pacific by free float, actually almost half of them, 45, are in Japan. So for very large money, like pension funds, sovereign wealth, they are definitely concerned about liquidity, and so that provides them a lot of comfort. And so that hasn't changed because Japan is still over twice the size of India with a much deeper and more liquid market. And as I said, these companies, be it a Nintendo or a Daikin, which are globally recognizable. I'm just picking two, but of course there's dozens more. And that gives people a lot of comfort. Maybe they haven't visited Japan, but they drive a Toyota or they use a Nintendo at home, that kind of thing. Whereas far few people probably have visited India or would know the names of companies that operate in India, the big Indian companies, of course, that are very familiar to you and to me. Most people outside of India wouldn't really know them. So anyway, I'm starting from that vantage point, and I suppose that nothing's really changed between that last conversation and today in terms of larger awareness of the world toward Japan than India. But what has changed is, I know it might sound a little bit superfluous as far as markets go, but the Chandrayaan-2 mission to the moon and the G20 summit in Delhi were genuinely front page news and a very positive news. I mean, a lot of times, a country can end up on the front page, unfortunately, because it's bad news. Like, for example, the Delta wave of COVID a few years ago, and because India is a very open and transparent country as far as media access goes, that was very widely reported, of course, compared to what was going on in China, where a few months earlier. So those things, I think, have really helped to put India more on the map of just people in general around the world, and investors too. As you earlier mentioned, the breakout in the market above 20,000 Nifty. A lot of people are trend followers, be they retail or institutions. And I don't think there's anything really the matter with being a trend following investor, because when a market is trending higher, it's got positive momentum. I mean, generally, it's going to keep going higher until that exhausts itself. So I better just round off my answer here. But I think that compared to the last time you and I met, there's a lot more interest in India. I actually just returned myself from Brazil, of all places. And that's normally not a part of the world that would be interested in the Indian market. But this time they were.
Wow, that's music to the ears. Now, Mark, you've looked at India very, very closely, both on relative terms, and I reckon even on absolute terms, you have a fair degree of view on India. Uh, what to your mind, or how do you look at it, not relatively, but in absolute terms? Because a lot of talk about valuations relative to emerging markets or otherwise being slightly expensive, the broader end of the spectrum, the government-led companies are all have risen quite admirably and quite sharply, if you will. How do you look at the Indian markets currently?
I'd say there's two things that differentiate it positively from its peer group. The first is the return on equity, which is in the high teens for India Inc., is quite a bit higher than the emerging market average, which is closer to 10%. And I don't really know off the top of my head why that is, but it is. I guess that other emerging markets just don't have as companies as profitable as Indian ones are. And the second thing is the growth. We can find many companies in India where we think that earnings will double within the next 5 years. We cannot find many in other emerging markets. We can find a handful in each, but when I mean a handful, I literally mean, this many. Whereas in India, there's several dozen. So it's that combination of highly profitable companies and companies that have a strong earnings growth that I think make it quite unique in the emerging space.
Would it be safe to assume, therefore, that you are constructive from where we are right now in Indian markets?
Yes. I mean, there is hype in the Indian market, as there is in every market, but because it is breaking to new highs, I'd say there's probably more hype than the average. So one does have to be selective, but it's a big enough market that you can be selective. And so what we do is we do screen for companies that we think, as I said, will produce that kind of earnings growth over the next few years. And those are the ones we choose to invest in. We're fairly sector agnostic, although I suppose that we do have a kind of bias toward the financial sector and materials and consumers. But any sector where we can identify high growth companies, we will look at them very closely.
Got it. Mark, now I'm trying to tie this in with your first answer, wherein that you mentioned that a number of events, or two in particular, put India on the world map. A lot of investors who hitherto would not have looked at India are looking at India. People who might have looked at India are now starting to show some interest in India, investing into India. Maybe a lot of it happens post the general elections get over in 2024, but be that as it may, if indeed this kind of interest translates into money coming in, which hitherto hasn't come into India, do you reckon that it gets absorbed easily, and could that be an even bigger positive for the Indian equity markets?
Well, foreign investors are still relevant and important, but I really do think that they are now no longer the most important force, and the most important force is domestic investors. And I think that baton was passed sometime in the last 5 years. Particularly last year, we saw that domestic buying was much larger than foreign selling. And the nature of the domestic buying is what encourages me the most because of the systemic investment plans. And if you look at other countries that have a similar setup, I can think of two in our part of the world. Australia with its superannuation funds, where every month a little bit of everybody's salary is taken and invested into the Australian equity market. And Malaysia also has a similar program. And so that constant domestic institutional buying, I think, is a force that's here to stay and will grow, and offers great cushion, great support to the equity market that wasn't around, for example, in the global financial crisis when, of course, foreigners sold India and the market collapsed. Last year, as we all know, even though the S&P fell a lot, it fell almost 20%. India, in rupee terms, was, I think, only down, better than I, but something like maybe 3%. Or maybe it was flat, I can't remember. So anyway, that to me is the much more potent force, the domestic investing. And because India has a good track record, I mean, if you look at the compound annual returns over the last 10, 20, 30 years, it's mid double digits in rupees. Local investors know that it's a good market to invest in. You actually can't say that about most other Asian markets. They produced roughly half the return, actually lower. So Korea and Taiwan probably gave you about 6 or 7% per annum. Here in Southeast Asia, you were maybe getting 3 to 5% per annum. So I'll conclude with just saying that it's the domestic investor who I think is the most important in India and will remain a very positive force.
Okay. Well, and it's heartening to see, Mark, because it's a change. Earlier, Indian investors did not own as much of the Indian equity, and a bulk of returns that have happened in the last 15, 20 years haven't gone to the Indian household. That is changing, and that's actually really good to know, or good to see as well. What, to your mind, Mark, could be potential tangible risks? People cite oil, people cite uncertainty around elections, but that's the two most spoken about risks currently. Do they feature in your list as well? And is there something else that you believe you look out for as a potential risk for Indian markets?
I always have a standard answer to that, which is the risks that end up bringing markets down are the ones that nobody's thinking about. So you're right, we're all thinking about what are the risks for India. Well, if the oil price keeps going up or I don't know, there's some kind of political upset or Federal Reserve continues to raise rates. I suspect if there is something out there lurking in the shadows, it's not that. It's something that we're not really talking about, and I don't know what it is. I just don't. But maybe some corporate governance scandal. Who knows? I don't really see. I guess I feel confident enough to say this. I don't really see any big risks on the horizon that are tangible enough that would dissuade me from putting fresh money into the market.
Which is great to know. One last question, Mark. There has been this consistent debate over the last couple of months around what's happening in the US in terms of the economic indicators versus the resultant impact on, let's say, yields or not just treasuries, but even the currency markets. And a lot of talk about a belief that the dollar index will strengthen quite materially, and the resultant impact it could have on other Asian currencies, including the rupee. Could that be something that could upset the apple cart, or do you reckon it will be a smooth transition, something that we've seen in the past almost every year?
It would be. The dollar rising is, as we know, historically a headwind for the Indian market. And the dollar has been rising over the last couple of months, or maybe I should say month. Maybe. Certainly the Americans still have a much higher interest rate than the most other developed countries, Europe, Japan. I think they're even higher than Australia and Canada, their treasury yield. But we're of the view that the rate hike cycle generally in the world is coming to an end, and led by the United States. And So we don't really see Treasury yields going higher. We think that they're probably going to go down from here. So with that in mind, I like the dollar, actually. I would prefer to be in dollar than euro or most other currencies. But I don't really expect it to, suddenly jump up. What is the dollar index now? I have to ask you to forgive me. I don't know off the top of my head.
104, 105.
105, yes.
Yeah, 104, 105.
So, I don't think it's going to 120 or something like that. And I think it's fine at about 105. I think that if it just stays around there, then India can still do well.
Great. Mark Matthews, thank you so much for taking the time out and speaking to us, and have a great week ahead.
Thank you, Niraj. You too. Thank you very much for inviting me on your show.
The pleasure was ours. Viewers, thanks for tuning in.